Hello, everyone, and welcome back. David, this may seem like it came out of nowhere, but did we know it was going to happen? Was Volkswagen always thinking about making this move? We didn't get many hints that it was going to happen, but Rivian was sure as hell raising money because they needed it. They've been spending a lot of money, and since they weren't making much, it didn't look like they would soon have positive cash flow. You could have found other business partners to help them get the money they needed, but this deal with Volkswagen is a big help. It's also good for Volkswagen. As a partner, a big auto business gives Rivian access to production, engineering, and a large parts bin. This lets them cut costs much more quickly than if they were making 50,000 cars a year on their own. VW, I thought they had their own electric cars. They do, and they have a scout group that is meant to make electric trucks. However, they may now be able to use Rivian's plans for pickup trucks and SUVs. If you've been paying attention to the EV scene, you know that things are heating up, and Tesla is right in the middle of it all. Today, we're going to talk about the newest market trends, how big automakers like Volkswagen are investing a lot of money in rivals like Rivian, and how these moves are changing the industry. We're not just looking at the numbers, we're also looking into what these investments mean for Tesla's future and how they were made. What makes now might be a good time to buy more Tesla stock. What makes Tesla different, even though there is more competition? We'll talk about these and other questions in more depth, giving you information and research that could affect the investments you make. Wait for it. I'm about to give you a full rundown of all the reasons why Tesla's stock might be about to go through the roof. Please click the subscribe button and ring the bell to be notified when we post new videos. You won't want to miss the useful information we've put together here on Tesla Stock News. The electric car market is getting a lot of attention because Volkswagen put a lot of money into Rivian, a well-known Tesla competitor. You might be wondering why all the attention is on Tesla when Rivian is the one getting the extra money. This is important because Rivian has been spending a lot of money, $1.5 billion just in the last quarter alone. Without this money from Volkswagen, Rivian's future looked bleak. The company might have to file for bankruptcy by the end of the year. Volkswagen's decision to put up to $5 billion into Rivian isn't just a way to keep the business alive. It also says a lot about how competitive the American electric vehicle market is, with Tesla being the main competitor. Volkswagen may be making this move as a way to protect themselves from Tesla's growing power. Think about it. Chinese electric cars, which are known for being cheap, might rule the world market if not for strict sanctions and import limits. In this case, it looks like the auto business is very competitive, and big automakers are working hard to catch up. Also, the market for electric vehicles is much bigger than just designing and making cars. It includes both strong political power and highly ingrained consumer tastes. Comments made by well-known and powerful people like former President Donald Trump have had a big effect on public opinion. Trump's criticisms, which often focus on what he sees as the problems with electric vehicles, like their short range and charging problems, are based on older models of EV technology and may not truly reflect the latest progress in the field. This involvement in politics has made things hard for businesses that make electric cars like Tesla. When a politician with a large following expresses doubt, it can make many potential buyers hesitant, which can change the mood of the market and even threaten investor trust. These political statements affect more than just what people buy. They can also change funding goals and regulations, which are very important for the EV market to grow and expand. Consumer tastes are also very important, which makes things even more complicated. When people switch from gas-powered cars to electric ones, they change how they drive and how they think about how useful and convenient EVs are. Even though Tesla comes up with new ideas and leads the market, it has to keep navigating the shifting sands of consumer attitudes and political influence in order to keep and improve its marketplace. The way politics and public opinion affect Tesla's business is more complicated than just product performance or financial measures. This means that market sentiment can be affected by a lot of different factors. As Tesla moves forward, it becomes just as important to understand and deal with these outside forces as it is to make technological progress. Now look at Rivian's situation. The brand has made a name for itself by making desirable, high-quality cars that could connect to Tesla's charging network, even though it's having money problems. Volkswagen's investment could mean that Rivian will keep improving its products, which could help it get a bigger share of the market until at least 2026. Such changes could be very important for people who are interested in how markets work and how to make money with investments. It's an interesting story about how traditional automakers are dealing with the switch to electric cars by working with new companies like Rivian to compete with Tesla. As we watch these business moves, we can't help but think about the future of the electric vehicle market and how these investments will change the way competitors do business. Investors are paying close attention to big players like Volkswagen, which seems to be strategically protecting its bets on Rivian as the market for electric cars heats up. Volkswagen's plan is like putting a call option on Rivian. They're betting on its success as a backup plan in case it gets hard for traditional automakers to keep up with the fast growth of electric cars. These kinds of moves show how people in the institutional auto business feel about things in general. People are very worried about Tesla's rising power, especially since battery costs are going down, which could make Tesla even more money. Lower interest rates are very good news for the electric vehicle business, especially for Tesla and other companies in that field. Lower rates usually make it cheaper to borrow money, which helps people pay for big purchases like cars and helps companies like Tesla spend in growth and new ideas. The current state of the economy could be good for Tesla because it gives the company the power to speed up growth and make more products. This possible drop in interest rates could be a big deal for Tesla. It would not only help Tesla finance its big projects more cheaply, but it would also make its cars more affordable for consumers, which could increase demand for them. Tesla could have a big edge over traditional automakers in this kind of environment. Traditional automakers are still making the switch to electric models and are often slowed down by the slow adoption of new technologies and infrastructures. Also, once the market has stabilized after adjusting to lower interest rates, the value of Tesla's stock could go through the roof. Reduced borrowing costs and more sales are likely to be noticed by investors as a way for Tesla to make more money, which could raise the company's market value. This boosted investor trust, along with Tesla's strong product line and track record as a market leader, could put it far ahead of traditional automakers. At the same time, people who follow the market are paying close attention to Rivian's finances. It is a straight competitor and has received large investments from Volkswagen. Rivian's ongoing financial problems, which are sometimes called a fire pit of cash burn, show how hard it is for new companies to get into the electric car market. Even with these problems, Rivian is an important part of Volkswagen's plan to compete with Tesla. Volkswagen's support shows that the company is hedging its bets on a number of different EV markets, which shows how tough the competition is for Tesla. The relationship between new companies like Rivian and big ones like Tesla shows how the industry is changing and how companies are competing. As Tesla keeps coming up with new ideas and expanding its reach, its long-term place in the global auto market will depend on how well it can take advantage of good economic times and deal with tough competitors. As Tesla's stock stays near $200 and possible selling pressure builds, this is a very important time to keep an eye on things. This could be a big moment for Tesla and the EV market as a whole. Time will tell, but one thing is for sure. The electric car market is still one of the most dynamic and quickly changing parts of the economy right now. You can feel the anxiety as the sell orders come through. Because of the changes in the car industry, a lot of people are keeping a close eye on whether or not institutions will strengthen their positions in Tesla. But what's going on with Rivian is a complicated puzzle for investors. At first glance, buying in Rivian might seem risky because it is using up a lot of cash and there is a chance that a lot of shares will be diluted as it tries to get more money to keep running. These signs usually mean to be careful, which means that Rivian could be a risky investment with uncertain results. But there's a bigger strategic picture to think about besides the short-term cash metrics. Rivian's problems and the investments that followed from companies like Volkswagen show a strategic positioning in the electric vehicle industry where big traditional automakers are desperately trying to get a place in the growing EV market. This situation shows that these automakers are trying to spread their bets in different areas. As Tesla's market share grows, For these big names in the business, Rivian isn't just an investment in one company, it's also a way to protect themselves against the fact that they are moving more slowly than Rivian to electric vehicles.